Hey everyone. Let's see what day is it? Tuesday. I just got done with lunch here. I was gonna just make a quick video to some people who missed class this morning. Um, little video for honors college counting, and we're taking a look at starting a new chapter. So that's why I wanted to make a video just to kind of zip you through a few of the things that you missed today. Everything is on Canvas, okay? And what I actually did, since we were missing a few people, is I took some snips from the book and I put them into the Excel so you can see the problem in your Excel that you load from Canvas as well. So a couple things for you guys to grab. You can grab my slideshow, which you can see on my screen. And then you can also grab the Chapter 7 Excel, all right? Mine's got some answers in it already, but yours will be blank. Yeah. All right. So hey, I'm going to keep this kind of short and sweet, and you can reach out to me if you have any questions. But I'm just wanting to get you guys a little bit of a head start on the chapter. Okay. So I'm going to get rid of my face here, and so you can see more of my screen. And let me just chat a little bit about what we took a look at today. Okay. We talked a little bit about buying some plant assets, and we said that, you know what, the difference between a plant asset and a current asset is the amount of time you're going to use it. Okay, a lot of times current assets are also considered to be consumables. All right, things like supplies get used up and insurance and things of those sorts. Whereas plant assets we're going to use for a number of years. And so we do have to take some value away from them throughout the years, okay, to properly reflect what they're worth. We also did a quick chat about going concern. We don't want to get rid of all of our assets at the end of the year. We're going to obviously use them from year to year. So we're going to make sure that we prepare financial statements showing that the business is ready to operate the next day and indefinitely. Okay, we'll record the cost of plant assets on the balance sheet, and then the cost of plant assets is recognized over many years by putting in a depreciation expense, which adds up to an accumulated depreciation. Okay. This is a good slide to read through and take a little bit of a deeper dive into, but I'll let you guys read it on your own. It talks a little bit about the cost of plant assets is a lot of times more than just the asset itself. Okay, it could include the surveying costs, realtor fees. It could include freight, shipping, installation, and even for consumers, I encourage everyone to look at the big picture. How much does something cost? You can afford maybe the raw materials, but having things installed might get expensive. Okay. We read through this article in class, and oh, it's really good. Okay, just kind of gives you a good idea of when you should buy, when you should lease something. That's up to you to decide. There's pros and cons to each. And sometimes we do want to buy an item and have it as our own and keep it. Sometimes we just want to borrow it for a couple of years. Okay, so again, an article that I really encourage you guys to read through. We took a few minutes in class to read through it. Okay. So there's some more slides that explain what I'm about ready to demonstrate here. So I'll let you guys look through those next few slides on your own. But the big thing I wanted to show you was this chapter 7, the first application problem. Okay. If you are ready for class tomorrow, knowing this first application problem, you should be in very good shape. All right. And those of you that are going to be gone longer, I'll send you some more videos. Okay. So for today, I just want to go through application 1. And that just takes a look at journalizing and some plant assets that we've bought, and then putting them into some plant asset records. So the first 2 tabs are used to do these 3 transactions. The first one, we're going to write a check and we're going to buy a machine. And that is right here. Okay. We are just going to put it in as office equipment. We don't journalize things as copy machine or whatever. We journalize things as office equipment, store equipment, warehouse equipment. Okay. We give them broader categorizations so that it's you don't have to post to dishwasher, refrigerator, all those types of things. Okay, you just have it listed as equipment. Once I journalize it here in the cash payments journal, I'm going to go to my second tab, which is a bunch of blank depreciation records, and you're going to fill in these top 6 lines. Okay. Feel free to pause my video and then fill it in for yourself. But as you'll note, all the data that's in those first 6 lines is given in the textbook. I'm just putting in some basic stuff, the plan asset record number, the description, the date I actually bought it, how many years I hope to use it, so on and so forth. Okay. I am recording all these purchases as 2011. Okay, because we're going to go ahead and depreciate them into the future. We're not going to worry about these later lines. We'll do those tomorrow. Okay, so for now, I'm just putting it in there. The next transaction says that I bought a storage shelving unit on account from Harris Supplies. So since I bought it on account, I'm going to have to put it down here. And it's going to be a debit to store equipment and a credit to accounts payable. Okay. Once I do that, again, here's my copy machine that I just put in. Now go ahead and roll down, and you notice I highlight shelving units so it pops out at you, okay? And fill in this data here, because we're going to depreciate this one tomorrow as well. Feel free to pause and fill that in. The final one is a little more complex because we're buying a building on some land. Now, one thing to remember is that buildings do get depreciated. Land does not. Okay, land never goes down in value. Okay, a building depreciates over the years. And also a thing to keep in mind is that the building and the land are purchased at a purchase price, in this case $225. They were appraised at $250 though. Okay, so we got a good deal on them, but we've got to journalize the $225 amount. And so we've got to allocate. So what I'm going to do to allocate is I'm going to go, and I just put this in the second tab way at the bottom. I am going to go ahead and put in the 200,000 and the 50,000, and that equals 250. Okay, that's the appraised value. Now, what I'm going to do, let me go ahead and get these numbers out of here so you can clear content. There we go. Now what I'm going to do is I'm going to figure what percentage of 250 is 200 and what percentage of 250 is 50. Okay, so I'll take equals this divided by the 250,000 equals 50,000 divided by the 250,000. Okay, so it's an 80-20 split. So now I know the assessed value is 225,000. Not the assessed value. The value that I paid is 225,000. So I'll take 80% of that, and then I'll take 20% for the land. So now I know my 180 and 45 split for the 225. Okay. So again, I just threw this table down here to help you. Another thing that we'll depreciate later this chapter is a vehicle, and we're going to break it down into how much the engine is worth versus transmission, tires, and brake. Okay. All right. So journalizing that, you'll see that I put the building on the first line and the land on the second. The total value I paid was 225, not 250. That's the assessed value. We paid, or the appraised value, I should say. We paid 225. And then for these two numbers, I simply linked them to the 180 and the 45. Okay. So with that in mind, the only other thing that we had to do today was to fill out a plan asset record for the building and another one for the land. Okay, so if you look at my plan asset record again, copy machine was the first one, shelving unit was the second. I'm going to put storage building in there. Feel free to pause. Fill yours in. Okay. Then I put land in. Now, land is not going to get depreciated. Nothing is going to go down here. Nothing's going to go down here at all. But I want to put it in the date I bought it and the original cost. NA means not applicable. Okay, not applicable. In other words, it doesn't matter what the useful life is. It's forever. It's the earth. Okay. Depreciation method, we're not depreciating it. Not applicable. Estimated salvage value, who cares? Not applicable. Okay, we're not going to resell it. And if we do, it should sell for at least what we bought it for. Okay. So just kind of wanted to give you a quick run through of what we did. I went quickly because I know that you can pause. Okay, you can pause and go back. If anything's bugging you, let me see if I can, where'd my, oh, I lost it. If anything's bugging you, you can go back to the slides and see some more examples. Otherwise, I'll see you guys tomorrow. And if you're going to be gone a little bit longer, I'll send some more videos. All right. Have a great day.